Okay, so we continue with case scenario 11. Purva Logistics, a goods transport agency, is registered under GST. It did not exercise the option to pay GST itself. What does it mean? RCM case. It provided goods transport service to the following persons in February of the preceding financial year: Kunal Traders, an unregistered partnership firm; Mr. Amar, a casual taxable person who is not registered; Small Traders Cooperative Society, registered under Societies Registration Act. So let's revisit GTA RCM case once. For GTA RCM case, if the recipients are RCB CF SPA, which we learnt the hint as RCB's cash flow at SPA. Okay, so this is the hint for you to remember the notified recipient. R for registered person, casual taxable person, body corporate. Next, C for cooperative society, factory, society, partnership firm, and AOP. Here, factory and society, it is necessary that it be registered, but for partnership firm, the fact that it is registered or unregistered is not of concern to us. Even if it is an unregistered partnership firm, it is still a notified recipient. Alright. So this will be covered under RCM cases. Furthermore, GTA RCM case, if you are providing service to unregistered person, it is exempt. Also, if you are giving to an unregistered casual taxable person, that is also exempt. Alright. So in the following three cases, cooperative society is obviously taxable under RCM. Unregistered partnership firm. As soon as you see unregistered, you shouldn't say that, oh no, they are not under notified person. They are under notified person. For a partnership firm, the fact that it is registered or unregistered is not relevant. Alright, so this will be taxable under RCM. Casual taxable person who is not registered is clearly exempt. It's not taxable. In a particular consignment in March of preceding financial year, Purva Logistics transported the following: defense equipments, railway equipments, organic manure. Certain goods, when they are being carried by GTA, are exempt. We learned in exemption chapter. Yes, for that the hint was mad Ron. Alright. M for milk, food grains, salt, etc. Agriculture produce, defense equipments, relief materials, organic manure, and finally newspapers. Correct? So now defense equipments, are they exempt? Yes. Railway equipments, we didn't study something like that. Yes, so this will be taxable. Organic manure, yes. We just saw that. Organic manure. Alright. Moving on. Purva Logistics exercises the option to itself pay GST on services supplied by it at 12% from April. In the current financial year, what are they doing? They are willing to pay FCM. Alright. It provides goods transport services to Bama Steels Private Limited on 1st April. Issued an invoice on 5th May. Payment was received on 6th May. For this, if when you are calculating time of supply, what will you do? Time of supply, it's a service. Yes, GTA service. It is FCM. What is the first question that you need to ask? Have you issued the invoice within 30 days? Have you issued it? When was the service provided? On 1st April. Have you issued it within 30 days? No, it's on 5th May. Issued the invoice on 5th May. So what will be your time of supply? It will be the earliest of date of completion of service or date of payment, whichever is earlier. So date of completion of service is 1st April. Date of payment is 6th May. So your earlier one will be date of service provision, which is 1st April. Alright. Similarly, when they are opting for FCM case, it is at 12%, 6% plus 6%. Here also in FCM case also, if it is provided to unregistered person other than notified, pay attention to that, unregistered person other than notified persons, then it is exempt. Alright, now let's move to the questions. Which of the following persons are liable to pay GST under reverse charge in respect of GTA services? We already said Amar was a non-registered casual taxable person, so this fellow was exempt. The other two are taxable. Kunal Traders and Small Traders Cooperative Society, they are taxable. So your correct option is option C. Second question, transportation of dash by Purva Logistics is exempt from GST. We already said defense equipments and organic manure are exempt. So option is C. What will be the time of supply? That also we calculated it. It was 1st April. So option is D. Alright, now we move on to case scenario 12. Case scenario 12 is Again, a very small case scenario. Miss Chanchala, a doctor by profession, is a registered person under GST, a monthly return filer having inpatient facility in her hospital wherein room charges are capped at 3,000 per day. Correct? Inpatient rooms are exempt. Alright, inpatient room rents are exempt. Miss Chanchala provided treatment of various diseases in her hospital, and apart from that, she also provided the following services in her hospital: plastic surgery to enhance the beauty of the face. We already saw plastic surgery will be exempt only if it was to correct the congenital birth defects or something that came out of trauma or injury. Yes, not to enhance the beauty of the face. Second one is ambulance service for patient transportation, exempt. Renting of space to run medical store, taxable. Alright, it is not covered under healthcare service. Here, inpatient room rent is also a composite supply along with your healthcare services. She is also a consultant in other hospitals and received 40 lakh as consultancy fee from other hospitals. That is also exempt. What do we have next? Further, she also provides canteen facility and received 55,000 from inpatients for supply of food as per advice of nutritionist. Now, this is a composite supply along with the healthcare services. So, what will happen? This will be exempt. 35,000 from patients who are not admitted. Outpatients, that will be taxable. 25,000 from visitors for the same facility. Visitors also is taxable. Alright, so 35,000 plus 25,000, a total of 60,000 is taxable here. She filed 3B for the month of June with some errors. Alright, so let's say June 2024. Alright, that's when she filed, June 2024 month. She had filed it with some errors. She filed the annual return for the said financial year on 31st October. Okay, so 31st October or October of 2025 she's filing the annual return. Okay, but what is the due date? 31st of December. When can she rectify it? Rectification of your returns can be done for a maximum of to the annual return filing date or 30th November, whichever is earlier. Okay, not the annual return due date, annual return filing date, whenever you are filing it, or 30th of November. Maximum you can go is 30th November or annual return filing date, whichever is earlier. All right. So 31st, so here they are filed on 31st October. So 31st October or 30th November, whichever is earlier. Earlier is 31st October. Compute the taxable value of supply of canteen service provided by Miss Chancellor. We already calculated the 60,000. 35 plus 25, 60,000. Option C is the correct answer. Maximum time permissible for rectification of error committed. Just now we saw that. Yes, 31st October or 30th November, whichever is earlier. Because 31st October is the actual date of filing annual return. Suppose they filed only on 31st December, then it will be 31st December or 30th November, whichever is earlier, that will be your 30th November. Determine which of the following services provided by Ms. Chanchala in a hospital is exempt from GST. Plastic surgery to enhance the beauty of the face, taxable. Ambulance services, exempt. Renting of space to run medical store, taxable. Consultancy services in other hospitals are exempt. So 2 and 4 are exempt. Option C is your correct answer. That is all with case scenario 12. Very simple case scenarios. If you're strong with your concepts, this is a fantastic revision for you. We move to case scenario 13. Neelkanth & Co., a registered supplier under GST, is dealing in supply of taxable goods in the state of Karnataka. The firm had opted for composition scheme from April month of last financial year. Turnover crossed 1.5 crores on 9th May of current financial year. They have opted for withdrawal also. Neelkanth & Co. removed goods on 10th June for delivery to Chandra & Co. on sale or return basis. Chandra & Co. accepted the goods via its confirmation mail dated 15th December. Okay. Now, due date under section 31 in case of sale on return basis will be 6 months from the date of removal or the actual date of sale, whichever is earlier. In time of supply chapter, it is always earlier. Okay. Earlier of 6 months from date of removal or actual sale. So, 6 months from 10th June will be your 10th of December. Actual sale has happened on 15th December. Whichever is earlier means it will be 10th December. The firm has paid GST for various items during the month of August. It comprised of the following. GST paid on input services intended to be used for personal purposes. Can I take the ITC? No. It's for personal purposes. It is blocked. GST paid on purchase of motor vehicle for business use, being a two-wheeler having engine capacity of 25 cc. See, any motor vehicle with an engine capacity up to 25 cc is not even considered as motor vehicle in GST Act. Okay, engine capacity up to 25 cc is not considered as motor vehicle. So does this ITC restriction apply to this particular vehicle? No. So it's not blocked at all. You don't have to look at the seating capacity or the use or anything. Alright, it is for business use. You can very well take the ITC. GST paid on purchase of computer 19,000. Is there any explicit provision where we studied that yes, on computer the ITC is blocked? No, we did not. But there's one particular provision that we studied, that if you are taking the benefit of ITC, you cannot claim depreciation on the GST component, correct? And look at the information they have given. GST portion was included as part of cost to claim depreciation under Income Tax Act 1961, which means this 19,000, on this 19,000 also we have claimed depreciation. Now can I take the benefit under Income Tax Act and GST Act? No. I can take the benefit only under one act, alright? So since already Income Tax Act benefit has been taken, I have to give away my GST benefit. Okay, I cannot take the ITC of 19,000. During May, Neelkanth and Co. had reversed ITC of 10,000. See, when did this happen? This happened in August. They're talking about May here. See, these are the portions where you are likely to confuse yourself when you're reading the question quickly. In your exam hall, you're more likely to overlook these little information. But this information can change your entire answer. Alright, so please make sure that you are aware of which month information you are reading for the first time. Okay. During May, they had reversed ITC of 10,000 or not making payment to vendors within the time prescribed. This pending payment was cleared in the month of August. We already saw that the time limit for re-availing the credit whenever you have reversed it because you did not make the 180-day payment is not applicable, correct? You can avail it whenever you are next making the payment. Okay, so pending payment was cleared in the month of August, so I can avail it in August. I can re-avail it in August. I reversed it earlier because I did not make the payment within 180 days, correct? Now I have made the payment, I can take it. There is no time restriction for that. Okay, out of purchases made and ITC availed during earlier months, the following information is made available as on September. Payment is due for these many number of days related ITC component. We all know if it is more than 180 days, I need to reverse it along with the interest, correct? Interest under section 50, depending on whether the ITC has been utilized. So here exceeding 180 days is 199 days. That is for ABC supplier. So this 15,000 I will have to reverse. Neelkanth & Co. received accounting services from Raghu & Co., an associated enterprise located in Sri Lanka. Raghu & Co. issued invoice for the service on 1st September, which was entered by Neelkanth & Co. in its book on 10th October. But payment was made on 30th September. When you have made a service, an RCM service from an associated enterprise. Okay, you have imported a service from associated enterprise. It will be earlier. Your time of supply will be earlier of date of payment or date of entry in your books of accounts, whichever is earlier. Date of payment is 30th September. Date of entry in the books of accounts of whose books? The recipient's books. Here who is a recipient? Neelkanth & Co. is a recipient. So which was entered by Neelkanth & Co. in its book on 10th October. So 10th October or 30th September, whichever is earlier, 30th September is your time of supply. Neelkanth & Co. needs to furnish a statement containing details of stock of inputs held in semi-finished, finished goods on the withdrawal of composition scheme. Okay, so they withdrew from composition scheme. Now they need to give a statement containing the stock details of stock of inputs held in semi-finished and finished goods when they are withdrawing. How much time do they have? It will be 30 days from withdrawal. Okay, so 9th May is when they withdrew. 9th May plus another 30 days. So May has another 22 days left plus another 8 days will make it 30 days. So on June 8th. Got it? You need to calculate this 30 days properly, because sometimes here 8th June is given, here the options are not very confusing, so it is fine. Sometimes what they'll give you 7th June, 8th June, 9th June. You will get confused, alright. So 9th May, for May to end you have 22 days. For it to become 30 days plus another 8. Okay, so 22 days in May, another 8 days in June for the 30 days to lapse, correct? So June 8 is your date. In respect of goods sent on sale or return basis, we already calculated this. It was 6 months from the removal or date of actual sale, whichever is earlier. Answer was 10th December. Determine the amount of eligible input tax credit that can be availed in the month of August. In the month of August is what they're saying. Here, a lot of you will only look at this because this is in the month of August. So this is 9,000. But look at the story they've given here. During May, we reversed. In the August, we cleared the payment. So I can re-avail this credit, right? So 9,000 plus 10,000 is a total credit that I can avail. Okay, this is a very important part of the question of this particular question. Okay, because many of you will forget about this. Here, since they have given 19,000, you have taken it. Sometimes they might give you one of the option as just 9,000. You wouldn't even think. You just choose it. Correct? Yes. Sometimes ICA will play with the tricks. You know, when you're in exam hall, all the options look right to you. Seriously, I'm not joking. They'll ask the question like, which is the most appropriate option? Every option will look like an appropriate option at the time, all right? Or you might have 2 or 3 options which look right to you, or you get all the 3 answers and you don't know which one to choose, all right? So please read the question carefully, not only the case study but also this question, all right? If you read the question, half of your job will be done. Moving on. Compute the amount of ITC to be reversed for the month of September. Ignore interest liability. So they didn't ask us to calculate interest. So we are fine. What will we be reversing? This 15,000 we'll reverse. You don't have to pay attention to the interest because they have asked you to ignore it explicitly. So it's fine. 15,000. Time of supply in respect of service imported by Neelkanth & Co. from its associated enterprise. We saw it will be either earlier of date of payment or date of entry in the books of accounts of the recipient. We saw the date was 30th September. Correct? 30th September or 10th October, whichever is earlier, 30th September. Moving on to the next case scenario. I think we're coming to case scenario number 14, I guess. Yes, case scenario 14. XYZ Electronics Private Limited, it's a body corporate, is the leading electronic goods manufacturing company in Delhi. The company produces a wide range of products including smartphone, laptop, home appliances. The sales by the company are mainly through distributors for on the following credit terms: laptops 15 days, smartphone 90 days, other home appliances 45 days. During the year, the company purchased plant and machinery worth 1 crore exclusive of GST. The GST rate is 18%. The input tax credit is not blocked under any provision of the GST law. Okay, we know for plant and machinery it is not blocked, but this is a capital asset. So what will you look? You will look if the depreciation has been claimed on the GST component. Okay, we are not talking about this 1 crore. We are talking about the 18% of this 1 crore. On the GST component, have you claimed your depreciation or not? If you have claimed depreciation, you can't take ITC. If you haven't claimed depreciation on that 18% of 1 crore, then you can take the ITC. The company is planning to demerge its operations in relation to the laptops. The demerged entity, PR Limited, will be a separate legal entity in form of a wholly owned subsidiary having common board of directors. They are wholly owned subsidiary, common board of directors. As per your section 15, it is a related party. Yes, this is a related party. The company also participates in domestic and international level trade fairs. Now there is a trade fair in Jaipur. The company is keen to participate and they are obtaining GST registration as a casual taxable person in Rajasthan with a validity period of 45 days. What is the actual validity of your CTP registration certificate? It will be either whatever is the actual date that is provided in the registration certificate or maximum up to 90 days. Alright. earlier of 45 days or 90 days. So here 45 days is the earlier one, so validity will be for 45 days. The company transferred the goods from one of its godown in Delhi to another godown in Gujarat. Okay, from Delhi to Gujarat, wherein the company has a registered place of business. The value of goods transferred is 5 crores and the rate of GST is 18%. The tax invoice was issued, GST was deposited, but consideration was not paid by the Gujarat office to the Delhi office even after 180 days of the invoice date. Now, this 180-day rule exception, there are 3 exceptions, correct? One is RCM cases. Second one is your Schedule 1 activities which are deemed supply without consideration, correct? And the third one is additions made to value of supply on account of supplier's liability incurred by the recipient. Okay, whenever a third party payment is being made on behalf of the supplier but by the recipient. Alright. These are the 3 exceptions to the 180-day rule. Okay. Now this is clearly a Schedule 1 activity where it is a deemed supply without consideration. Correct. So this 180-day rule exception will not, 180-day rule will not apply here. This is an exceptional case. There was no reverse movement of such goods from Gujarat to Delhi godown. What shall be the time limit to issue invoice for supply of smartphones? Supply of smartphones, FCM case, it is goods, correct? When is the due date of invoice under section 31? Before or at the time of removal of goods, correct? Doesn't matter. They have given all this credit terms and stuff. We have never learned anywhere that you need to pay attention to the credit terms, correct? So it shall be before or at the time of removal of smartphones to distributors. Option B. Second one, in relation to the plant and machinery purchase, select the correct alternative. ITC can be claimed value of 18 lakh, which is 18% of 1 crore. Depreciation can be claimed on 1.18 crore. No, only on 1 crore. ITC of 18 lakh can be claimed, depreciation on 1 crore. ITC of 18 lakh can be claimed, depreciation on 1 crore. So, correct answer is option B. How shall PR Limited be treated under the provisions of GST law, which is a demerged entity? We already saw it's a separate legal entity, completely owned subsidiary plus common board of directors. It is a related party. So it shall be treated as related party. Third one is option A. What are the other options? Distinct entity, additional place of business, sole selling agent. It's a related party. It's clearly a related party. Fourth one, the period of retention of books of accounts related to prior period to demerger under GST law. The retention of books of accounts, if you read this particular part itself, you know it is 72 months from the due date of filing the annual return for that particular year. Answer is option B. The validity of GST registration in the state of registration. This is for the CTP registration. It will be 45 days or 45 days is the actual date in the certificate. So 45 days or maximum 90 days, whichever is earlier. So here earlier is 45 days. Answer is 5th A. Question 6. Which of the following statement is true in relation to the non-payment of consideration by Gujarat godown to Delhi godown? I already told you 180-day rule will not apply to this because it is a Schedule 1 activity. The restriction of 180 days for payment of consideration is not applicable in the present case. Answer is option C. Now we move ahead to the next case scenario, number 15. Case scenario 15, Ecotech Solutions Private Limited, again body corporate, is engaged in manufacturing and supply of energy products. So they manufacture solar panels. They also provide installation services, annual maintenance contract. The company received an advance payment for a bulk order of goods in March 2024, but the delivery was completed in May 2024. The amount of advance received by the company was 1 crore. What did I say before? Advance, when it is for goods, you don't have to consider for time of supply. Okay, only when the actual time of supply calculation you're doing, you can continue with that. But if it is for services, you will have to consider that advance. Okay, for goods, advance payment, you can completely ignore it. During the month of March 2024, the company sold goods worth 5 crores and services amounting to 1 crore. This is during March. The goods worth 1 crore sold under multiple invoices were returned by a customer due to defective. So we have got a sales return also. In the month of March, which were originally sold by the company in Jan 2024. The company issued a GST credit note against the goods in March. So in March, what are the things that are happening in March? You sold for 5 crore goods, you provided services for 1 crore, you also issued a credit note. Credit note is nothing but your sales return, correct? You are reducing the value of your supply. So GST credit note also you issued in March 2024 for a value of 1 crore. So your total value of supply in March will be 5 crore plus 1 crore minus 1 crore. Again it will be 5 crore. The company incurred an amount of 5 lakh on repair of the returned goods to make them resaleable to other than a related party. Okay, so you will take the further the customers who returned the goods issued an invoice to Gujarat unit of the company of 1 lakh for the expense related to return of the goods. The goods were initially sold from Gujarat unit, but the same was returned to Maharashtra unit. Okay, originally it was sold from Gujarat, but when it is being returned, it is returned to Maharashtra. Now from Maharashtra they will send it back to Gujarat. Okay, and subsequently moved by the company from Maharashtra to Gujarat unit. The company is registered under GST in both the states. So they are having two different registrations in two different states. Yes, so that makes it what? Distinct entities. Correct? Schedule 1. Based on the facts, we need to choose the answer. At what point of time tax will be payable in relation to advance received by the company of 1 crore? When will you take it? You will take it when the actual supply takes place. Yes, actual time of supply of goods, not when the advance is received. The total amount of supply during the month of March 2024 to be reported in GSTR1 by the company. This is for March. We just calculated it before. 5 crore plus 1 crore minus 1 crore. The credit note is a minus figure. Which of the following is correct in relation to the returned goods of value 1 crore? Company has an option to issue single credit note against multiple invoices, has to mandatorily issue separate credit note, cannot issue credit note in subsequent period, can only issue a commercial credit note, and GST adjustment cannot be made. This is wrong, correct? There's nothing called as commercial credit note. Cannot issue credit note in any subsequent period after the supply is made. No. The company has to mandatorily issue separate credit note against each invoice. Is that possible? No. I mean, it is possible, but when you have the option in the registered party's hand to issue a single credit note, why would you issue separate credit note? Correct? So they have the option to issue single credit note. This is the correct answer. Okay, there is nothing restricting the registered person from issuing a single credit note for multiple invoices. Okay, you can issue a single credit note very well. In case returned goods are sold by the company to customers other than the related parties, the value of supply shall be equivalent to the original value of supply, equivalent to original value of supply plus the cost incurred on making the goods reusable, 110% of the original value plus the cost incurred, transaction value subject to the conditions mentioned in section 15(2). Yes, you will make whatever changes are required as per section 15 subsection 2. What is it covering? All those taxes, your incidental expenses, packing costs, and all those things you will consider, subsidy, everything you will consider. You will make necessary adjustments to the transaction value, and whatever is your final value will be the correct value of supply in this case. When it is sold to customers, the returned goods are sold to customers other than related parties. Fifth one, which of the following option is correct in relation to the invoice of 1 lakh issued by the customer for the expense relating to returned goods? Yes, the customers had issued invoice to the Gujarat unit for rupees 1 lakh, correct? Now can I take the ITC on this 1 lakh? Yes. What is restricting me from taking that ITC on 1 lakh? Nothing, right? What provision is restricting me? Nothing. This is in the course of furtherance of business. Yes. So I can fully avail the ITC. Look at the other options. Shall not be allowed to avail ITC. Nothing is restricting me. Shall not be allowed to avail ITC in excess of 50% of tax amount charged on such invoice. Did we learn something like that? No. Shall be allowed to claim input tax credit only if it has not issued any credit note to the customer against such return goods. No. This is the correct answer. While moving the goods from Maharashtra unit to Gujarat unit, the goods shall be accompanied by original invoice, invoice by returning customer, invoice by Maharashtra unit to Gujarat unit, delivery challan. Now this Maharashtra unit and this Gujarat unit are distinct parties, correct? Distinct entities. Obviously you need, it is a supply, it is an interstate supply, you need an invoice. So your correct answer is option C. Now we move on to case scenario 16. Mahi & Co. LLP registered under GST is engaged in various types of business activities. It provided GTA services to government department registered under GST for providing various services. Mahi & Co. did not exercise the option to pay GST, which means it will be covered under RCM cases. Now, revisiting, this is a very important point, okay? GTA services to government department registered under GST for providing various services. This is a very, very important sentence in this case scenario because usually your GTA exemptions, all right, when it is given to the government, when it is given to a state government, central government department or establishment, or to a local authority, or to government agencies that are registered only for TDS under section 51. Okay, government agencies that are registered only for the purpose of TDS under section 51, then the GTA services are exempted in these three cases. Yes, but however here it's a government department, yes, registered under GST for providing various services, which means they are registered under GST not for the purpose of TDS but for the other various services. All right, so in this case this is not covered under exemptions, rather this will be taxable. Okay, this will not be covered under exemptions. The firm provided service by way of renting of residential dwelling to the student Mr. Pavan, an unregistered person. We all know residential dwelling to an unregistered person is exempt. Mahi & Co. let out its warehouse to Mr. Shankar, who in turn let out to an agriculturalist. See, Shankar letting it out to an agriculturalist is subletting. All right, that is not Mahi & Co.'s business. All right, Mahi & Co. let the warehouse out to whom? To Mr. Shankar. This is for commercial purpose. Yes. Now here Mahi & Co. is a registered person. Correct. So supplier is registered here. Therefore, it will be FCA. The firm also undertakes catering service to Vishwas Anganwadi. The said Anganwadi has received fundings from the government. That's not relevant. But the firm also undertakes catering service to Vishwas Anganwadi. Is that exempt? Yes. For Anganwadis, it is exempt. The firm purchased the following goods during the month of July. Capital goods amounting to 45,000, on which depreciation has taken on full value including GST. So we already said if you take the benefit of ITC, then you cannot give the benefit of depreciation. If you take the benefit of depreciation, you cannot give the benefit of ITC. Alright. So here depreciation has been taken on full value including GST. So you will not take the ITC for this 45,000. Then, raw materials purchased amounting to, raw materials purchased amounting to 55,000 for which invoice is missing but delivery challan is available. Section 16, conditions for availing ITC, you must be in possession of the tax invoice, correct? So just because invoice is missing and delivery challan is available, do you satisfy the condition to avail ITC? Absolutely not. So you cannot take this ITC also. Further, for the month of July, the GST liability was 20,000 IGST, 10,000 CGST, 10,000 SGST. The following credits were available in the set month. What are the credits? First is IGST. Okay, IGST, you will use it completely for IGST first, then in CGST or SGST, whatever order you like, correct? So 8,000 completely you have utilized it for IGST. Next is CGST has 12,000, but the liability is only 10,000. So 10,000 you will use it for CGST. The balance 2,000, where will you use it? Not to SGST, to IGST. CGST and SGST credits, how will you use? CGST credit, you will first utilize it for CGST, then whatever balance is left, you will use it for IGST. Same way for SGST, first you will utilize it for SGST, balance you will give it to IGST, correct? So for SGST credit 5,000 is there, so 5,000. So IGST entirely 20,000 minus 8,000 minus 2,000 10,000, CGST nil, SGST 5,000. This is your net tax liability. Alright, let's look at the questions. Choose the correct statements. For GTA services, government is liable to pay tax under reverse charge. For for renting services, Mr. Pavan is liable to pay GST under reverse charge. No, Mr. Pavan, it was the renting service for residential dwelling, right? So, no. For GTA services, Mahi and Co. is liable to pay GST under forward charge. No, they have explicitly said that they are not opting for forward charge, right? In the beginning of the question, Mahi and Co. did not exercise the option to pay GST. So who will pay the GST here? The government department will pay, okay, when they're providing the service. So this first one is correct. Government is liable to pay GST under reverse charge. And this is wrong, correct? Because they have not opted for forward charge only. For renting services, Mahi and Co. is liable to pay GST under forward charge. For renting services, obviously they are paying under forward charge only. So 1 and 4. Which of the following information options is correct in respect of GTA services provided to government department? GTA service is taxable at 12%. No, 12% is when you're opting for FCM. When the GTA is opting for FCM, it will be under 12%, correct? Here, in respect of GTA services provided to government department, RCM is applicable, yes, but RCM GTA service is taxable at 5%. But input tax credit cannot be availed for the same. Yes, we already learned this. If the 5% rate is applicable, then you cannot take the benefit of ITC. So option D is correct. Which of the following statement is correct? Letting out of warehouse to Shankar is exempt. Is it exempt? No, it is not exempt. It is taxable under FCM. Catering service to Vishesh Anganwadi is exempt. Letting out of warehouse to Shankar is not exempt. Yes, we saw that. It's not exempt only. Catering service is no. So answer is option D, 2 and 3. What do we have next? Mahi and Co. is eligible to claim input tax credit on the procurement value of, this is for the inputs. One, section 16 was section 16 condition, invoice possession was not there. The other one, they have taken the depreciation benefit. So answer is nil. Okay, you can't take it on anything. Final one, we have calculated the GST liability of the firm for July to be paid in cash. Alright, there are two ways they will ask you net GST liability. Either they will mention it as net GST liability to be paid, or they will mention it as GST liability to be paid in cash, which means after you're adjusting the credit, whatever is your net payable, that is what you will pay in cash. They've asked us to, they've said rule 86B is not applicable. What is rule 86B? The condition that at least 1% of the amount should be paid using electronic cash ledger. Alright, we've already calculated this. IGST 10,000, CGST nil, SGST 5,000. Answer is A. Now let's move on to the next question. Case scenario 17. Case scenario 17, Veena and Co. of Jabalpur was registered under GST under composition scheme. Outward supply of the firm for the month of July 2024 was 10 lakh. Okay, this is composition scheme. Veena and Co. a normal one. Okay, out of which 2 lakh was supply of repairing services. In the preceding financial year, the firm was doing trading of taxable goods only. Turnover of the concern for the previous financial year was 100 lakh. Alright. So when you're in composition scheme, you are allowed to have a marginal service, but for that the limit is 10% of the turnover, correct? 10% of the turnover of the preceding financial year or 5 lakh, whichever is higher. That is your limit for the marginal service. Alright. This is in case of other than restaurant. Now the firm imported the following service during August. Alright. So the firm has imported some services. Architect services. architect services from Mr. Vinod, a partner of the firm who resides in France, for 1 lakh. The said service was paid but not used for the furtherance of business. This is coming under section 7 clause 1, section 1, section 7 subsection 1 clause B. All right, section 7 subsection 1 clause B. What is it? Here service has been imported. It is for a consideration, but it is not in the course of furtherance of business. It is still considered as a supply. All right. Management consultancy services from Mr. Lal, a renowned lawyer in Sweden who was an ex-employee of the firm. Tell me, is a ex-employee a related party? No. Ex-employee is not covered under related party. The value of the said service was 3 lakh. Even though it was used in the furtherance of business, no consideration was paid by the firm. As per Schedule 1 activities, it will be in the course of furtherance of business. It has to be between a related party. Even if there is no consideration, it will be considered as supply. But here, this is in the course of furtherance of business, but unfortunately, this is not between related party or distinct party. Yes. So, even if there is no consideration, this will not be considered as supply. Aggregate turnover of the firm crossed the limit of 150 lakhs on 25/9/2024, from which date the firm was liable to pay tax under regular scheme. Now let's look at the questions. Tax liability of Veena & Co for the month of July 2024. They have given the turnover as 10 lakhs. Okay. They've given the turnover as 10 lakhs. I'll show you where it is. See, 10 lakhs. Outward supply of the firm for the month of July 2024 was 10 lakhs. Okay. And this is in case of goods and along with a marginal service. For them, the rate is 0.5%, 0.5%, totally 1%. Alright, so 10 lakhs into 0.5% is 5,000. So that's how you got it. So sorry. Second question. Import of service by Veena & Co that will be treated as supply is, which is only one thing was treated as supply is, this 1 lakh alone will be treated as supply. This will not be treated as supply because it's not between a related party. Veena & Co will be eligible to claim ITC held on stock and capital goods as on C. They are shifting from composition scheme to regular scheme. Alright. So, when can you will be eligible to claim ITC of all the stock that is held as on the day immediately preceding the day on which you are shifting the scheme. Correct. So, 25/9/2024 is when you changed to regular scheme, right? From composition scheme to, you transitioned from composition scheme to regular scheme. So as on 24/9/2024, which is the day immediately preceding the day from which you transitioned. All right. So that is all with case scenario 17. Moving on with case scenario 18. So we have case scenario 18. Pavan was engaged in providing various services within the state of Rajasthan since May 2024. Aggregate turnover crossed the threshold limit on 4/7/2024. He applied for registration under GST on 2/8/2024. He got his GST registration on 10/8/2024. Obvious question is going to be, what is your effective date of registration? Yes. So he became liable on 4/7/24. When do 30 days lapse? On 3/8/2024. When did they apply? On 2/8/2024. So that is within 30 days. They have applied within 30 days. Yes. So what will be your effective date of registration? Whenever you became liable for GST registration. If had they not applied before this 30-day lapse, then whenever they are granted the certificate, whenever they are granted the registration certificate, that will be the effective date. So here within 30 days they have applied. So the date on which they became liable will be the effective date. After taking registration, Pavan started a business across India, including supply of goods also. So far he was doing services. Now he has started goods also. He dispatched goods pan-India based on orders he got from the goods dealt by him. He received an order from Delhi for which he supplied taxable goods valuing 45,000. The rate is 12%. He also supplied certain exempted goods valuing 4,000. He made one invoice for both taxable as well as exempted supply made to Delhi. Alright. He asked his tax consultant for the requirement of the generation of e-way bill for this order. The tax consultant informed him that the requirement of e-way bill is based on consignment value of goods supplied. Yes. Consignment value is correct point, because if it is more than 50,000, then yes, you need a e-way bill. Now here the value is 45,000. So do I need an e-way bill? When you're calculating the limit for e-way bill, you will include the GST component also. Very, very important. You will include the GST component also. So GST component is 12%. Yes. So 45,000 plus 12% is 50,400, which has well exceeded the 50,000 limit. So yes, e-way bill is applicable. Even being a micro enterprise, they did not receive the timely payment, so they decided to shut down. He got placed in a software company as a senior programmer executive. While shutting down his business, he informed his tax consultant to cancel the GST registration. The tax consultant surrendered his registration online on GST portal on 25/10/24, and his application was approved by the proper officer on 31/10/2024. When you're cancelling the registration, within how much time limit do you have to give your final return? Final return should be given within 3 months from the later of the following. Okay, it's not earlier. In time of supply chapter, everything was earlier. Here it is later. All right, 3 months from later. Please keep this in mind. 3 months from later. All right, of date of cancellation or date of order of cancellation. Okay, date of cancellation is 25/10/24. Date of order of cancellation is 31/10/24, which is a later date, 31/10/24. From this 3 months, which means 31 Jan 2025. You have time up until 31st Jan 2025 to file your final return. Alright, moving on to the questions. Effective date of registration of Pavan, we just saw that 4/7/2024. Consignment value of goods supplied to Delhi by Pavan 50,400. We calculated this. Due date by which Pavan is supposed to file final return under GST 31st Jan 2025. Such a simple case study. Moving on to case scenario number 19. This is very important. Alright, this is a quite an important case study because it is unusual and unexpected. Yeah. So far, the case studies that we have seen so far, they were a bit repetitive. You know, the concepts sometimes overlapped with each questions, but this one is a very good question. All right, like the minute you read it, sometimes like if this question was something that you saw in the exam paper, you'd probably think like, why is my life so hard immediately? All right, when you first read it, but it's easy. It's an easy case study, but when you read through it, you might feel a bit uncomfortable. All right, if you're not strong with the concept. So do go and revise exemptions chapter. A lot of them feel it hard for hard to keep it in mind. Exemptions chapter is also one of the chapters where a lot of tricky points are being asked by ICI, so please pay attention to that. KBC Insurance Limited is an insurance company. Okay, so we are dealing with an insurance company supplier providing life and non-life insurance products across India. The company has been carrying on its business for the past 3 years with the approval of IRDA. KBC Insurance Limited secures its business through various insurance agents spread across India. Those agents include individuals, firm, LLP and private limited company. However, all of them are licensed under Insurance Act. The company availed services of renting of motor vehicle for its employees through RR Travels Private Limited. This is a body corporate where cost of fuel is included in the consideration charge. So here the supplier is a body corporate. Yes. Will this come under RCM? No. Okay, even if cost of fuel is included in the consideration charge, since the supplier is a body corporate, this will not be covered under RCM. The service provider charged 5% GST and informed the company that it is claiming ITC only in respect of the same line of business. Alright. KBC Insurance Limited provided the following details of insurance business for the month of May. Now these are some of the services that they have provided. Okay, we'll read through it when we are going through the question. KBC Insurance Limited received a proposal for pandemic insurance for IPL matches from the franchisees. Sum assured was 250 crores with a premium of 50 lakhs. The company issued the said policy on 1st July. Invoice was on 5th August. Premium was received on 14th August, which is payment was on 14th August. KBC Insurance Limited received the following supplies during the month of May, and the details of GST on such supplies are as follows. Alright. Now they have given even more information. GST paid on purchase of car for use of managing director 5 lakh. For managing director car, it's blocked ITC. Yes. GST paid on bus seating capacity for 14 persons. See, seating capacity, if it is more than 13 including the driver, then ITC is not blocked, correct? Here capacity is for 14 persons purchased by the company for transportation of employees. Yes, it is used for business purpose also. Seating capacity limit also has exceeded the blocked limit. So 3 lakh is allowed. This point is very, very, very important. Alright. GST of 80,000 was paid on general insurance taken from Amity Insurance Limited. Okay. So our recipient of this service is also an insurance company. Yes. We took insurance from another insurance company for motor vehicles for transportation of passengers with seating capacity of up to 13%. Okay. So if you see at one glance, what will you think? Okay, this is insurance. We saw that if it is general insurance, repairs and maintenance, lease and hiring, all these services, if it is for motor vehicles for which the ITC is not blocked, then you can take ITC on these services also. But if it is for the vehicles for which the ITC is actually blocked, then the services ITC is also blocked. But there are exceptions. Correct? ITC on vehicle is not allowed if on these services not allowed. Correct? Sorry, ITC, if the ITC on vehicle is not allowed, then on these services also it's not allowed. But two exceptions are there. One, when it is received by general insurance provider, when it is received by the manufacturer of that vehicle. Why? Why? What is the logic? Because I'm an insurance company. I took insurance from another insurance company and I am providing the same insurance to my recipients, correct? To my customers. So I'm taking an inward supply for the same line of outward supply, correct? Whatever I'm bringing in, I'm taking it out. Same thing out, correct? We are in the same area of work, right? So this 80,000, irrespective of the fact that the seating capacity is only up to 13%, this is allowed. This is one of the most important adjustments in this particular question. Alright, it's a bit tricky, but once you get the hang of it, it's fine. Okay. Why did we take this again? You are taking an inward supply of insurance for an outward supply of insurance. Alright, so this GST of 80,000 is allowed. All the amounts, the company has a policy to claim ITC for all capital goods. Aggregate turnover is not less than 10 crores for the past 3 years. Let's look at the question. Determine the services on which company is liable to pay tax under reverse charge. Services availed from insurance agents. Yes, insurance agents will be split across the country. So we know insurance company will pay the tax under reverse charge mechanism. What about the RR Travels Private Limited? We already saw it. Even if the fuel cost is included in the consideration, they are a body corporate. Supplier is a body corporate. Hence, not liable to pay tax under reverse charge. So answer is, determine the service on which company is liable to pay tax under reverse charge. Only on A. Compute the total value of exempt supply provided by KBC Insurance Limited for the month of May. The next question is compute the total value of taxable supply. Alright, so these two questions we can together finish it by looking at this. Let's see. This is one of the areas where a lot of people just skip. Okay. At least if you read through, you can remember. Okay. Services of life insurance business provided under following schemes are exempt. Janashri Bima Yojana, Aam Bima Yojana, life micro insurance product provided maximum amount of cover is 2 lakh. This Pradhan Mantri Jan Dhan Yojana is here. Correct? It's covered in exemption. Aam Aadmi Bima Yojana is also covered under exemptions. Micro insurance product, but sum assured is 2.5 lakh. But we said only up to a cover of 2 lakh. Alright, so this is not exempt, this is taxable. Then received on reinsurance of group personal accident policy for self-employed women. This is also covered under entry 35 actually. General life insurance providers. Okay, this is there in your ICI study material. So please just read through. All right, so that you remember that yes, I saw this in the book. It was given under the exemptions. Okay. Where is it? Services of general insurance business provided under the following schemes are also exempt. And you have the group personal accident policy for self-employed women. Alright, so that is also exempt for you. Received on fire and special perils policy is not covered under exemptions. Received on money back policy is issued also not covered under exemptions. These both things are not covered in any of these lists. Alright, so exempt will be 5 lakh plus 3 lakh plus 1 lakh 9 lakh. The rest of the thing will be taxable. Alright, so 9 lakh and 23 lakhs are your answer. Nine lakhs and 23 lakhs. Yes. Alright, 23 lakhs. Determine the amount of ITC that can be claimed by KBC Insurance Limited. We saw that general insurance can be taken 80,000. Yes. And GST paid on bus seating capacity of 14%. This also can be taken. So 3 lakh plus 80,000. This is blocked. 3 lakh 80,000 is the ITC that you can claim. 3 lakh 80,000. Determine the time of supply of service provided to IPL franchisees. Where did we read that? There we go. KBC Insurance Limited. Alright. So this is a service. This is covered under FCM only. So when it is an FCM service, what is the question that you will ask? Have I issued the invoice within 30 days? But this is an insurance company we are talking about. So instead of 30 days, what will you check for the time limit? 45 days. Okay, you will check 45 days. Within 45 days, from 1st July, 45 days is 15th August. Alright. Within 15th August, have I issued the invoice? I have issued the invoice on 5th August. So yes, I have issued within 45 days. So what will be my time of supply? It will be either the date of invoice or the date of payment, whichever is earlier. So 5th August is earlier, correct? So 5th August is my time of supply for this franchisee. 5th August. Alright. Now we move on to the next case scenario. So next is case scenario 20. Aditi & Co., a partnership firm registered under GST, is undertaking various government projects. The firm has let out on hire the following vehicles. A motor vehicle to carry more than 15 passengers to the state government electricity department. An electric operated vehicle to carry more than 12 passengers to local municipal corporation. An electric operated vehicle to carry up to 12 passengers to state transport undertaking. Now let's go revisit what are the exemptions when it is given in hiring of vehicles. Okay. If it is to a state transport undertaking, motor vehicle carrying more than 12 passengers, then it is exempt. And if it is to a local authority, then electrically operated vehicle more than 12 passengers will be exempt. Now comparing this information here, state transport undertaking, is it more than 12 passengers? No, up to 12 passengers. So this is not exempt. Local municipal corporation is a local authority. Yes. Electric operated vehicle to carry more than 12 passengers. Yes, this is exempt. Next is to state government electricity department. We never talked about the government departments or establishments. So this, even if it is carrying more than 15 passengers, no, this is not exempt. This is rather taxable. Okay. Then the firm issued invoices pertaining to two independent outward supplies, where in one invoice value of supply was understated by 75,000 and in another invoice value was overstated by 45,000. When something is understated by 75,000, when your value of supply is understated by 75,000, Now you need to increase the value, correct? It's understated, you need to increase the value. What will you issue? You will issue a debit note. In another invoice, value was overstated by 45,000. If it is overstated by 45,000, I need to reduce the value. So what will I issue? I'll issue a credit note. The firm received certain, so debit note for 75,000 and credit note for 45,000. The firm received certain supply of goods amounting to 8,40,000 from registered persons on which tax was payable under a reverse charge basis. Now, in respect of vehicles let out on hire, services that are exempt from GST. We said state electricity department, no. Transport undertaking, it was up to 12 passengers. So, no, it's not exempt. Only local municipality electric operated vehicle. Answer is option B. Which of the following is correct in respect of document to be issued? We already said debit note for 75,000 and credit note for 45,000. So, answer is C. Which of the following statement is correct in respect of supply of goods amounting to 8,40,000 received by the firm? Okay, this is the RCM case, the last point that we learned. Firm shall issue a payment voucher at the time of making payment. Firm shall issue a delivery challan for supply of goods. No, this is not. This is about RCM case. Okay, you received. Which of the is correct in respect of supply of goods amounting to 8,40,000 received by the firm which are taxable under reverse charge. You are the recipient of the service. You are paying the recipient of the goods and you are paying the reverse charge. What will you do? The moment you make the payment, to the supplier, you will issue payment voucher. This is the correct answer. Receipt voucher at the time of making payment. How will I issue receipt voucher when I am making the payment? Not possible. Firm is not required to issue any document. No. Payment voucher is correct. Third one is A1. Alright. Yeah, so that brings us to the end of case scenario 20.